Eye out in terms of what's taking place on the downside with specific stocks. We've been talking about how NBFCs are lower, Piramal Enterprises, India Bulls Housing Finance, IIFL Finance, all these stocks are down anywhere between 2.5% to close to 5% odd. Honasa is down around 3.2% in today's trading session, and something like a Bajaj Hindustan, which saw a strong run and a relief rally post the government measures on sugar. That stock is showing some amount of profit taking, so that stock is down around 2.5% odd. IREDA, which has seen a strong run, has now come under profit booking as well, so that stock down 2% odd. But nonetheless, let's start the show with a focus on the market and what does 2024 hold for the market and which are the top stocks and sectors to bet on. We have Sandip Bansal, Associate Director at ESK Investment Managers, joining in to discuss this. Sandip, hi, welcome to the show. Well, you know, there seems to be some amount of caution which is emerging from a couple of experts, indicating that maybe it could be prudent to take some profits off the table. And that there is a little bit of euphoria which is setting into the markets, which is evident in, you know, what we're seeing in the IPO world, in the SME IPO world, as well as maybe in terms of the deal activity as well. Would you take that caution on board? Is that your view as well?
The way to think about it is, you know, what is the time horizon that one is investing for? You know, if you look at the long-term story for India, that continues to be very robust. We continue to believe that, you know, earnings growth are likely to be in the mid to high teens over the next couple of years. We have seen a lot of capital raising by corporates, you know, which has enabled them to prepare for this longer term growth as well. Policy support is continuing. Having said this, are there pockets in the market where valuations seem extended? Are there places in the overall space where you know, we do not see that balance sheet strength, you know, or that management execution capabilities? Maybe the answer is yes. But we would not like to paint the entire market with one brush. We believe that, you know, still there is a lot of money to be made by investors in India who are investing for the long term in solid, robust businesses.
All right. What, according to you, would qualify then as solid, robust businesses, and where do you think there is still, you know, place to enter even at that high elevated valuations, and it offers an attractive prospect from a 1-2 year horizon?
Sure. So valuations definitely from a historical perspective, you know, do look elevated. But, you know, within that valuation framework, we also need to factor in the quality of growth that we are going to see, you know, how the balance sheets have been repaired, what is the return on equity, you know, that those businesses are likely to generate going forward versus their historical experience. And, you know, for what duration of growth are we talking about? Is the growth more sustainable, more durable, and more consistent now and over the next few years versus what we've experienced historically? So valuation alone as one number, you know, might not paint the entire picture in our view. The sectors where we believe that, you know, opportunities still exist is that entire manufacturing, industrials, infrastructure complex. We believe that the businesses over there have a growth runway which is very long. And, you know, a lot of businesses over there have raised capital as well, which kind of prepare them for that growth. That space in itself has a lot of associated and allied businesses. So, you know, it could be, let's say, logistics, it could be staffing. So there are various ways to play this entire segment. In addition to that, you know, maybe the auto ancillary space is also an attractive space. Pockets over there, you know, we believe growth could be far more structural in nature, and valuations are still not that expensive. Then premium and discretionary consumption. Therein we believe that growth rates are going to remain high for a long period of time as income levels are rising and as aspirations increase and as the youth proportion of the population, you know, continues to be high. Additionally, you know, there are pockets in the banking space. where valuations are not, are quite reasonable. We have seen very good growth in the retail lending side over the last many years. If the manufacturing sector is to pick up, if infrastructure build out needs to happen, then we will see this entire corporate re-leveraging cycle that is going to play out. And, many names in the BFSI sector will benefit from the same.
Okay. Sandip, what are you probably highlighting as the biggest risk going into next year? And, I'm sure a lot of clients ask you about the elections as well. Post what we saw from the state elections, what are you advising clients when it comes to such kind of a risk?
So obviously, there will always be risks in markets. As of now, we see more risks, in the global world than risks emanating from India. So if we talk about the known unknowns in the global world, it is, how this entire, cost of capital is going to play out. Obviously, the belief now is that, the Fed is done with its rate hiking cycle and it's going to cut from next year onwards. But, we really need to see how it plays out because at least the ECB and the Bank of England seem to go more with the higher for longer kind of a narrative, which is quite opposite to that of the Fed as of now. Then how entire global growth is going to play out. Are we going to see a mild recession in the US or not? Or both of these things, obviously, the cost of capital not only impacts earnings growth, but it also has an impact on the way valuations work out for equity as an asset class. Then, the recession in the US or, how growth pans out in Europe, because Europe has been weaker, has an impact on Indian exports. Chinese growth has been quite weak. China is a very big player in commodities and chemicals. That has an impact on the profitability of sectors in this segment. So how that plays out. In addition to this, there are geopolitical risks that we know of, the results of which we'll have to see going forward. And on the Indian side, while policy continuity is one aspect, which the market will obviously be focused on. The other things is, inflation.
Sure.
Vegetable inflation has been a bit of a bother. How crude prices play out. Below $80 is the sweet spot for us. And
Sure.
then the erratic weather. So, that is something which we'll be focused on.
All right, Sandip, it's been a pleasure. Thank you very much for joining in and speaking with us and giving us your view. Thanks very much for joining in and wishing you a great festive season as well as year end. Well, that's the view coming in from ASK Investment Managers. There's some news on Nazara Technologies where they have undertaken a partnership to publish 5 games. That stock is up around 1%. We'll take a short break. On the other side, we'll bring you all of the FNO cues to track today. Stay tuned.